What is going on? Let's answer that question with Andy Brenner, head of international fixed income at National Alliance. He puts out must-read market commentary, and he joins us now. Andy, it's great to have you back on the program. It's been too long. What is happening with global fixed income markets?
Brian, it's a new month, and what you have is a lot of supply coming. You have supply coming all throughout Europe, and you have supply today in the corporate markets. We counted about 25 deals today, probably somewhere around 27, 28 billion, and that all has to be absorbed. Then, of course, as you mentioned with your last guest, you have the tariff issue. You take away the tariff income, and then all of a sudden you wonder, how is the government going to pay off some of this deficit? And that's a little bit of a concern. And then, of course, you have what we've been talking about more recently is, the Fed and will they continue to have their independence? And the less independence they have, the more the yield curve is going to steepen. So you've got all these things going. We said on Thursday, after all the month-end allocations and extensions with 10 years at 420, there was no upside. And now, you hit 430 today, and you're bouncing between 428 and 430. Similar with long bonds. You got to 487. You got to 499.6 today. You didn't quite get to that 5%. I think we're going to look at higher long rates. But one thing I will say is when you have the employment number on Friday, that could be a real barn burner one way or the other. If it's a much higher number than expected, we're going to see the CTAs get stopped out. We're going to see people get very short.
What does that mean? I know what you mean about CTAs getting stuck out, but for the folks in the back, what did you just say? What does that mean?
CTAs are long 10-year futures. They're going to be forced to sell, as well as vigilantes will be coming in. There's going to be a huge force. Now, that's if it's a good number, meaning a number 100, 150 with 75 expected right now. And then if you get a terrible number, what it means is the Fed is absolutely going to ease in September, which we think anyway. The question then becomes, do they do 25 or 50? We still think 25. And the yield curve is going to steepen dramatically.
So this is an important point. And if I'm hearing you right, Andy, and I love reading your notes, that's why I'm so glad you came on. There's this expectation, and I don't blame people. The Fed cuts rates, borrowing costs go down. I don't think that's always the case. And is there an argument to be made that even if we get the 25 or the 50 basis point cut September 17th, that the bond market doesn't react? Or maybe the bond market reacts the other way, sells off the price, brings the yield higher because now it's worried about inflation or something else. Is that a possibility?
Brian, very good point, because 1 year ago when the Fed eased 50 basis points, it wasn't too long after that, the 10-year backed up 89 basis points. So you had the Fed cutting 50 and the 10-year backing up almost 90 basis points. So, yeah, that absolutely could happen. And that's going to be a problem. But you know what? Bassant's a very smart guy. He understands this, whether he has to cut back on the long end or something like that. If he doesn't like the results, he certainly hasn't added to the long end. We don't think there's going to be an Operation Twist. But, there was also an article that came out yesterday saying that the president wants to put in some kind of emergency procedures to help the housing market. Now, I'm not sure how he's going to do it. I'm not sure how he's going to get mortgages, which are around 6.5, 6.6, down to 5.5, which I think is what you need to clear out things. I'm not sure he's technically going to do that without getting the 10-year down in yield.
You'd have to buy mortgages, right, Andy? I mean, you just have to step in and become another Fannie Mae or Freddie Mac, I guess. I don't know.
Well, given that you have Mr. Pulte, both the chairman of Fannie and Freddie, anything could happen, but I still think he's limited as to what he can do.